How does inflation affect your savings and financial returns? Have you ever wondered why your savings seem to buy less over time? That's inflation at work. Inflation reduces the purchasing power of money, meaning your dollars will buy fewer goods and services in the future. This is especially important when it comes to savings. If the interest you earn on your savings does not match the inflation rate, the real value of your savings declines. For instance, if your savings account earns 1% interest but inflation is 3%, you are effectively losing 2% in value each year. This loss makes it harder to reach your long-term financial goals. The money you save today will not stretch as far in the future if inflation continues to rise. Savings accounts often have interest rates that are lower than inflation. This leads to a gradual decrease in the real value of cash savings. Even if the nominal balance of your savings grows, inflation can outpace these gains, meaning you can buy less with that money over time. To protect your savings, many people look to investment options that typically provide returns above inflation. Stocks, real estate, and inflation-protected securities like Treasury inflation-protected securities are popular choices. These investments can adjust or grow in value to help maintain or increase your purchasing power. Inflation also impacts fixed-income investments like bonds or certificates of deposit. While these may offer steady returns, their fixed interest payments might not keep up with rising prices. This can lead to lower real returns. A common strategy to manage this risk is to diversify your portfolio with assets that can grow or adjust with inflation. When managing savings during inflation, consider these practical steps. Look for savings accounts or certificates of deposit with interest rates that meet or exceed inflation when possible. Think about inflation-indexed securities that adjust returns based on inflation changes. Diversify your investments to include stocks or real estate, which may offer growth that outpaces inflation. Be aware that holding large amounts of cash without growth can lead to a loss in purchasing power. Inflation erodes the real value of savings and financial returns unless those returns exceed the inflation rate. Adjusting your saving and investment strategies to account for inflation is essential to preserve and grow your financial wealth over time.